This is the uranium sector review for October 28, 2018. In summary, I think the uranium sector is in the early stages, early innings of a renewed bull market, but this downtrend here that we had over the last couple of weeks comes as no surprise, but it's been very harsh for those of you who have held. This is a reminder for us to take some profits. If you rode this last upswing, it doesn't hurt to take some profits, especially when you see a lot of these negative divergences that we've been pointing out over the last couple of weeks. So let's take a look at what's going on. For purposes of brevity, I'm going to go relatively quickly here, but this can give you a good idea of what's taking place. So here's the URA ETF on the monthly level. We're pulled back 12% here. It's a nasty pullback. We've got PPO continuing to move lower. So and we're at the lower boundary of this Bollinger Band. So if we can't find support here, the floodgates to the downside could indeed open. We're at some support here around that 40 RSI level. That's where we found support in the past. Let's see what happens from a longer term perspective. On the weekly perspective, this is the bullish, seemingly bullish kind of wedge pattern that tends to break to the upside, but so far we have broken to the downside. PPO has broken below zero, and until we break above that $12 zone, I wouldn't touch this with a 12-foot pole. You see this 38 level has served as support before, and now we broke below. Now, could this be a false breakdown? Yes, it can. So keep an eye on what actually takes place over here. Here's the URA on a daily perspective. So far, we found some support around that 1150 zone. Coincides with this support level in November. So that's a positive sign. You want to see this break above $12 to get back into this if you're not already riding this down wave. And again, we called this when we saw on an hourly level a lot of divergences. We couldn't break above that 70 level, and that typically means that momentum has waned and that a lot of these momentum traders are going to start selling, and that's exactly what happened. And here's what we were pointing out here in terms of divergence. When we had a new high or a double top here, but momentum was really breaking down, that was your first sign to consider trimming your losses. Now you're seeing some positive divergences. This is not exactly a double bottom, but you are seeing positive trend and momentum. So we could see a rally here to basically 1280 right now without much resistance. I want to see what takes place. PPO is breaking above zero. So if the markets, especially the broader markets, do bounce as I expect them to, this could be a good bounce back period for uranium. So onto the names here, mostly penny stocks. Apache Energy Corp. You can't even see much here, but it's been in a consolidative move for the last 2 years. It had a nice rally from 17 cents to 32 cents, but we couldn't break above that last breakdown point right over here, and we closed the week slightly below the 50 RSI level. This could be a false breakdown and we can rally, but if we don't rally here, then I expect a breakdown and possibly heading down all the way down to around the 10-cent level. But at the same time, I wouldn't be surprised if we roll back higher and have a very strong week this week. There's a ton of accumulation here, and so there's still hope for Apache or API. Blue Sky Uranium Corp, another one that's been starting to show positive signs of momentum here, but every time we hit this downtrend, we seem to head lower. So long as we're above that 40 level on RSI, which served as support here, that's a positive sign. I want to see this break above that 17-cent level and ultimately above this downtrend line before going long myself. Cameco, here's the major player and really the reason why we fell hard. So look at this. We had multiple highs here in price, but momentum almost every single time was lower. That's not a positive sign in Cameco. You want to see this 50 RSI level hold. We closed the week below that level. But the upswing did have positive volume. The last couple weeks have had a very low volume. So we closed the week above the 50 moving average. So if this can find some legs and hold above that $10 area, I think ultimately it does break above 13. But Cameco is not looking so great. CanAlaska Uranium couldn't hold that 50 RSI level and we broke lower. We found some support, so we did bounce. We had a low of 24, closed the week not at the lows, so this could be a bounce point here for CanAlaska. DPLO, another one that pulled back. We had negative divergence between this run and these runs, and so the pullback was not a surprise. We broke down from this uptrend right over here, if you draw a trend line. So let's see if the 50 RSI level holds. Could be a little bit more downside on this name, but I don't know how much downside there is. I think the longer term upside here is really impressive. Denison Mines, another one that really was looking strong, but we found resistance on the 200-week moving average around 69 cents. Coincided with this breakdown at 84 cents of RSI. We couldn't break the 70 area, and we pulled back. Now we're finding support, closed above the middle Bollinger Band and the 50-week moving average. So long as we're above this area, I think this is a very positive pullback. And so long as we close above the 50 RSI over the next couple of weeks, I think that's going to be setting the stage for an eventual break above the 200 EMA. Encore Energy. Now this one looks very strong. I mean, this is a cup and handle. This is a bullish flag, and ultimately I think this breaks above 18 cents or 15 cents rather very soon. I like what I'm seeing here. Stop loss below basically 10 cents here will represent good risk reward for a very strong breakout if it does happen. Energy Fuels, UUUU, another one that's pulled back some. We had a double top with negative divergence, and we're around that 50 RSI level. I expect this area to hold. I don't expect it to go much lower than 244. Ultimately, I think we head higher towards that $5 zone. Fission Uranium Corp, another one that showed positive momentum on this breakout, but we couldn't hold it, and we had a very strong whiplash move to the downside. Had a low of 43, but we bounced, and I think that this says that there's a lot of support here, and ultimately I think we move higher in the coming weeks. Forces Metals, we found support here at the 50 RSI after this pullback, and I like the name. If we hold that 20 cent zone, I think ultimately we consolidate here for a little bit and move higher. Gold mining, this is on this chart because it's got uranium plate in this particular in its portfolio, and it is showing a rounded base and positive momentum. I covered it in the precious metals video, so I'm not going to go into it here. We do own some of this, so keep that in mind. And anyway, we really like the name both in the short and the long term. GVX Uranium, GVXXF. Downtrend was broken from the upside. Now we're kind of retesting it from the upside. If this 15 cent level can hold, that would be great. But you know what? It's showing a lot of negative divergence. I mean, we couldn't hold this 50 RSI level, and we're back to that 40 level. I don't know. I don't like what I'm seeing here, to be honest with you. If this 15 cent level doesn't hold, I expect it to head lower to about 12.5 cents. Laramide Resources, on the other hand, I like what I'm seeing. It broke above this downtrend. It's consolidated, and it's holding here above this downtrend breakout. Above the 50 RSI level is very positive. So long as it holds above the 26 cent zone, I think it heads higher towards 60 in the coming months. Next Gen Energy couldn't hold this $2 zone, and it did break down. So stay away from this name until it breaks back above the $2 zone. Sky Harbor had a nasty pullback since its inability to break above that 70 zone the last time we broke down over here. If it can hold this 30 cent level, very positive, but you want to see it break above the 50 RSI and soon. UEX Corp, it's not showing any real signs of strength right now, so there's not really anything to see here. Your Energy really breaking down. It's finding support at that 40 RSI level here, so it might find a tradable balance here, but it's really kind of one of the weaker names in the sector right now, as is UEC, which actually is breaking down on multiple levels. So it's got good fundamentals, but something's going on here that I don't like from a technical perspective. There's really no reason to be long from a technical perspective. And finally, a couple more names here. We've got Western Uranium Corp. This looks really good here. I mean, it's consolidating above the 60 RSI zone, and I think that this ultimately resumes itself higher. Nothing else than to kind of retest the 270 zone. So anything above Below 2 is really a buy right now, and around 280 could be a good selling point here. Westwater Resources, kind of the death stock in the sector. It can't break above this downtrend, so there's nothing really to see at this point in time. Anyway, guys, bottom line, we've had a very weak strong pullback and a very weak uranium trading market over the last couple of weeks. That coincides with the overall market as well. So if we have a bounce in the markets, as I anticipate we will, we can see a nice tradable bounce in the uranium sector. But until these downtrends are broken in some of the major names like Cameco, I wouldn't expect this to show some any long-term strength until those downtrends do break. But there are some opportunities, as you've seen, so definitely want to be looking at them very closely. Good luck with your trading. Have a great week.